You know that feeling, right? Just drowning in information, especially when you're trying to understand something complex, something really important like big investments or business deals.
Yeah, absolutely. Information overload is real.
You want to get it quickly, but without getting totally lost in jargon.
Exactly.
Well, today we're diving into one of those areas. We're talking private placement memoranda, PPMs.
PPMs.
Now, a lot of people probably just think, oh, dry legal documents, regulatory stuff.
That's the old view, definitely. But what we're finding and what we'll explore today is that they can be, well, really powerful strategic tools.
Strategic how?
Yeah,
Like for attracting investors,
yeah,
especially in those big high volume deals.
precisely. We're talking deals with serious capital, lots of players involved, and the PPM is evolving way beyond just a compliance checkbox.
Okay, so they're becoming more like dynamic narratives, investor focused stories.
That's a great way to put it. They're moving from static legal requirements to really engaging investor-centric narratives. That's the core shift we're seeing.
Interesting. So our mission for this deep dive then is to unpack that, to show you how sophisticated investors, the accredited folks, the institutions looking deeper are actually drawn in.
Hmm.
And we're drawing heavily on a key source, PPMs, the cornerstone of investor confidence and high volume deals. And we'll be focusing quite a bit on the insights of Dr. Pooyan Ghamari.
Yes. The Swiss economist, founder of the ALEND platform. His work is really central to understanding this evolution.
So let's jump right in, challenge that old view. These aren't just legal papers anymore.
Not at all. Dr. Ghamari's research really emphasizes this point. PPMs are becoming these powerful strategic narratives. They're fundamental to building investor confidence, driving real engagement. It's quite a shift in thinking.
Okay, I get the what moving from compliance to strategy, but why? Why is this happening right now? What's changed?
Well, a big part of it is the global economic landscape itself.
Yeah.
Think about the speed of digital transformation, right?
Sure, everything's faster, more
Yeah,
connected.
exactly. And investor priorities are shifting too. So crafting a PPM today, it's not just about ticking the legal boxes. You have to weave in insights. Investors actually care about economic foresight, real brand authenticity.
So things like AI analyzing markets in real time or maybe blockchain for transparency, that kind of tech is changing the PPM game.
Absolutely. Those capabilities allow for a level of integration and transparency that just wasn't possible before. It forces you to go beyond compliance and tell a much more compelling, forward-looking story.
And Dr. Gamari really focuses on integrating global market intelligence, doesn't he? How does knowing, say, global trends help tailor a specific investment offer?
That's his core insight, really. His work, especially looking at international investments and even immigration policies, highlights this. Traditional PPMs were often too narrow, too focused only on the deal itself.
Right, like they existed in a vacuum.
Precisely. Ghamari argues you need to show how the deal fits into the bigger picture. Broader economic trends, geopolitical shifts, you name it. It's not just about the financials anymore. That context elevates the appeal massively for sophisticated investors. It shows strategic thinking.
Okay, that makes sense. So investors today, they're probably worried about volatility, complex regulations, maybe new things like crypto.
All the above. Market volatility is huge, regulations are a maze, and yes, digital currencies and new asset classes are throwing curveballs.
So a good PPM tackles those head on.
A great PPM does. It uses that macroeconomic context Dr. Ghamari talks about. For example, showing how a real estate deal connects to global migration patterns or new alliances. That gives investors a framework, a sense of predictability almost.
It builds trust then, because they see the bigger why.
Exactly. It fosters trust and encourages that long-term commitment because the deal isn't just floating in space, it's grounded in understandable global trends.
Now, here's something that might seem a bit unexpected in this context. Cause-related marketing, like ESG stuff finding its way into a PPM.
Yeah, it sounds maybe a bit out of place at first, but it's surprisingly powerful. The research shows incorporating social responsibility, ESG factors, environment, social governance really resonates today.
Especially with high net worth individuals, I gather.
Very much so. They're increasingly looking beyond just the bottom line. ESG is becoming a standard filter for many serious investors.
Okay, but some might hear social responsibility and think it's just, feel-good stuff, maybe good PR, but not core to the investment strength. How does Dr. Ghamari connect it to actual portfolio resilience?
That's the critical link his analysis makes. It's not just about ethics or image. He finds a direct connection. Investors associate these socially responsible investments with, one, stronger brand loyalty for the underlying company or project, and two, perhaps surprisingly better resilience in turbulent markets.
Resilience? How so?
It suggests companies focused on ESG might be better managed, more forward-thinking, maybe less prone to certain risks. So it becomes part of a robust investment strategy, demonstrating a kind of holistic value that includes financial strength and societal impact. It's not just fluff.
Wow. Okay. So we've got global context, ESG. It really feels like a total reinvention. And you can't talk reinvention today without digital innovation, right? Maybe even tokenization.
Absolutely. Dr. Ghamari's work, particularly through his ALN platform, is right at the forefront of this. They're using digital tools to fundamentally change how PPMs are created and even experienced.
Experienced. How do you mean?
Well, instead of just a static PDF, imagine a dynamic, data-driven presentation. ALN solutions allow for personalization the PPM might adapt based on what parts you, the investor, show interest in.
Wow.
And it allows for real-time feedback. It's interactive.
Ah.
A huge leap from just reading a document.
That sounds much more engaging. And what about tokenization? That word pops up everywhere. How does it fit into PPMs? I remember trying to explain private equity lockups. Tokenization seems like it could fix that illiquidity problem.
It's a potential game changer for liquidity, exactly. Tokenization essentially means taking an asset like a building or gold or a private company's stake and dividing ownership into digital tokens on a blockchain.
So you could trade smaller pieces more easily.
That's the idea. It makes traditionally illiquid assets potentially much easier to buy and sell, opening them up to a wider range of investors. The source mentions platforms like Gold as an example, showing how crypto and token concepts are being used to offer new ways into markets like gold and real estate.
So making these potentially illiquid assets almost tradable like stocks in a way.
Kinda, yeah. It introduces novel ways for investors to engage and potentially exit positions much more easily than before.
Okay, so bringing this all together, if I'm running a company trying to raise serious capital from smart investors today, what are the key things I must do when creating my PPM? What are the actionable steps?
Right, let's distill it. Based on Ghamari's insights, one, embed that deep macroeconomic analysis, show the global context.
Got context.
Two, clearly highlight your ESG commitments. Don't bury them. Use them to differentiate.
ESG upfront, okay.
Three, leverage digital platforms. Make the PPM interactive, transparent, maybe even personalized. Ditch the static PDF mindset.
Go digital, makes sense.
Four, seriously consider incorporating tokenization or crypto-backed options if appropriate for the asset. It signals innovation and tackles liquidity concerns.
Explore tokenization.
And fifth, and this is still crucial, provide crystal clear ROI projections, but back them up solidly with market data. Demonstrate the value and show you've thought through the risks.
So context, ESG, digital, tokens, and clear data-backed ROI. That's a solid checklist.
It covers the core elements of this new investor-centric approach.
And how do you know if it's working? If you invest time and resources into creating this super sophisticated PPM, what results should you look for? What are the metrics?
Good question. You'd look for things like higher investor engagement rates. Are people spending more time with the materials? Are they asking deeper questions? You'd track brand sentiment scores. And critically, deal closure velocity.
Faster closings.
Potentially, yes. Because you're addressing concerns up front, building trust faster, and maybe attracting more aligned investors from the start. These metrics help prove it's not just an expense, it's a strategic investment that helps bring in capital more effectively.
It really sounds like Dr. Ghamari's work paints a picture of a fundamental shift. As we wrap up, what's the single biggest takeaway you want listeners to get about PPMs today?
I think the main thing is they've truly evolved. They're not just static legal documents anymore. They are, or at least they should be, dynamic strategic tools.
Tools for engagement.
Yes. For engaging sophisticated investors by using compelling narratives, global context, social impact, and cutting-edge digital methods. It's about embedding strategy deep into the fundraising process itself.
Absolutely. And understanding the shift is vital, really, for anyone involved in raising capital, investing, or even just trying to follow where finance and business strategy are heading.
Definitely.
So something to think about as we finish. With digital innovation speeding up and social responsibility becoming so central to investing, how do you think the actual definition of value in a deal might keep changing? What new things, new assets, new criteria might investors start prioritizing next?